We've had a lot of conversations with clients about politics. What do investors need to know?
Markets don't care about politics, they care about policies, and that's what impacts the market.
The first year of a presidential term, generally the second best year. The second year of a presidential term, generally the worst. The third is the best, and the fourth is the third best. So it goes 2, 4, 1, 3. But at the end of the day, look at each one of those years, you have greater than a 52% chance of being positive that year. So in other words, 52% chance of having positive returns in the market.
Even in the years where maybe the returns are less than they were the year before, there's still areas in the market to make money.
Welcome to Wealth Strategies Unleashed with Concenture Wealth Management. Thanks for joining us this week. I'm Robert Gilliland.
I'm Karen Hyder.
Karen, thanks for stepping into the new studio and
this is awesome. I love it.
And so, if you're like me, you're probably getting sick and tired of watching something on the television, and every single commercial is a political ad. Mm-hmm. We're right smack dab in the middle of the political election. Things are crazy going on. There's a tremendous amount of information that's out there and where it is, and it's top of mind for our clients.
Yep.
I think it's vital that we have a conversation about that, not from a social aspect, but more from what do investors need to know and need to think. But before we do that, as is tradition,
afraid you almost forgot here.
As is tradition, you got to give us your very best dad joke.
So this week I have a good one. You just got back from an elk hunt recently, didn't you?
Did. Wasn't successful, but it was a blast.
Awesome. So I found a joke for you that is perfect timing, having just come back from this elk hunt. You ready for it?
Kind of.
Okay. Have you ever had a bad sausage? It's the worst. I was really hoping to get some elk sausage from you.
Yeah,
when you
believe me,
got back.
I was hoping to give you some elk sausage. So there's always next year.
Mm-hmm.
So let's talk about elections.
Let's talk about some of the things that are top of mind. I know that there's a lot of topics that are in the news that we're focusing on between the two candidates. So let's just dive right in. Talk to us about tariffs. Let's start there.
There's one side, and then there's kind of a gray area. I think we've all heard that, or we all know that during Trump won, he had put tariffs on China and kind of is arguing now for increasing those, as well as having what they call universal tariffs. So anything that's manufactured outside of the U.S. comes in, is gonna have a tariff. There are people who feel very strongly about that. The objective inside of that, my belief is, from the Trump administration, is to get more things manufactured here in the U.S. And that can be good. That'll mean workers and everything else. But we also have to remember there's a possibility that those tariffs could end up being inflationary. Now, the Harris campaign is kind of in a gray area. They want more targeted tariffs. And what's interesting is that they go and they talk about the Trump tariffs, but when they were in office, they didn't undo them. So they kind of like those targeted tariffs inside of there, and they'll maintain those, and they may even add a few. But if you're going through and looking at tariffs, now why are tariffs important is because at the end of the day, if they put a 200% or 100% tariff on a good that comes from a foreign country, where's that going to go? Well, it's going to go to the consumers, and that's why that is partially inflationary. There's a little bit of concern about where it is, but we also have to remember when you hear Donald Trump say we're going to put 200% tariffs on things, we also have to remember that we're in the middle of political season, so people are going and saying things, and they're saying it for political reasons.
Absolutely.
The other thing is we have to remember that everything's viewed as a negotiation. So if I start way up here, I can settle down here, and it's a win-win. Right? And so we have to be aware that tariffs, and right now, just to reiterate, Trump is kind of for universal type tariffs in hopes of bringing manufacturing back here. And then the Harris campaign is more along the lines of targeted tariffs where we can protect our goods and services and intellectual property.
Okay, what about corporate taxes?
Yeah, corporate taxes. Now that's a place where both parties are completely separate. So when you go to look at the Harris campaign, Number one, therefore, a global minimum corporate tax, that being roughly about 15%. Okay, so no matter what, if you have a company, you need to pay 15%. Trump wants to, and during the Trump, and oh yeah, by the way, Harris also wants to increase where the corporate tax rate from 21% up to 28% on U.S. corporations. Okay, there's an argument that makes the U.S. corporations less competitive because that's higher than where the rest of the world is. Trump actually wants to go down, and the last numbers were around 18% on corporate taxes. Well, in theory, what ends up happening is that ends up giving corporations more capital to either invest in infrastructure or the things that back into their business, give it back in the form of dividends, pay out more money, and make them more profitable to either shareholders or employees. So there's an area that you're very much a big difference in there. Trump wants to reduce it for corporations here in the U.S., which will have an effect on tax, which will have an effect on stock prices, possibly an effect on dividends. Harris wants everyone in the world to be at a minimum, which I think Trump would probably agree with, but Harris wants to raise the U.S. corporate tax rate.
Okay. All right. Here's one that I think most people are keenly aware of and listening very closely. Talk to us about the differences between what they're saying as far as income taxes go.
Yeah. Well, what's interesting, and this is really a mindset that changes, right? Prior to Ronald Reagan, and we have a progressive tax system, meaning the more that you owe, the more that you earn, the more you have to pay in taxes. And Reaganomics changed it from, hey, look, let's cut taxes, which will mean that more people will earn more money or have more money, and they'll end up paying more in taxes. And that's kind of where the philosophy is. Trump is along the lines, and we have the Trump tax cuts that went into effect in 2017. They're all set to expire because the government is smart like this, set to expire in 2026. So there's some key components inside of there. Number one, Trump wants to extend the Trump tax cuts, lower tax brackets. Probably most important to clients that we talk to is the Roth conversion, the ability to go through to do that, convert your traditional IRA over to a Roth. Yes, that's taxable now, but we'll be paying a lot less taxes down the road because you have opportunity for tax-free income.
Yep.
Now, what Harris wants to do is she wants to do away with the vast majority of the Trump tax cuts. And doing away with the vast majority of the Trump tax cuts, there are some pieces that she wants to keep. The expansion of the extension of the child tax credit. She wants to keep taxes low for anyone whose households are less than $400,000, but turn around and go back to the higher rates for any household or individual that's earning over $400,000. So that's a real talking point right there. What's interesting is that the presidents don't necessarily dictate what it is. They have the power to veto. It's actually Congress that makes the laws.
So what about energy?
Yeah, energy. Energy's pretty interesting. One of the things that if you were to have Harris elected, you're going to have increased focus on renewable and green energy. I mean, that's obvious, right? In Trump, drill, baby, drill, right? So when you go through to look at it, as an investor, there's a really interesting point. If Trump, when Trump was president, when you look at clean energy versus, we'll call it oil, which do you think the stocks performed better?
Hands down, I would say oil.
Yeah, well, actually, it's the exact opposite. Clean energy performed very, very, very well. Part of the reason is that it's an emerging, growing, and became kind of a big deal, right? But a very emerging industry. So it was opportunities to get in at the beginning. Yeah. People were starting to look at that. You had some of the ESG stuff kind of flow through that put a big focus on that. But clean energy significantly outperformed oil. On the other side, we just had the Green New Deal pass, right? Yep. But what is absolutely amazing is that oil has significantly outperformed clean energy when it comes to stock price and appreciation.
That is interesting.
And that's because the price of oil has gone up because we cut back on the amount of places that we could go and drill.
Mm-hmm.
And so that's kind of where that comes in with energy, but that kind of relates over to regulation.
Yeah.
Right. And that's the other difference with Harris. You will probably see increased regulation when it comes to banking.
Mm-hmm.
You'll see increased regulation when it comes to energy. There'll be a lot of other regulations that will be in there. The opposite end of that is that Trump wants to do away with a lot of that different type of regulations that are inside there.
Interesting. So I feel like we covered a lot in terms of the big issues that we keep hearing. But what about from a philosophical standpoint? I feel like there's some differences between the two in terms of those kind of issues. So think about price gouging. How do the two view it?
Yeah. When you go through to think about that, right? It is a philosophy of one side or the other. One side feels that the government does not have the ability and should not be setting prices. The other, coming at it from a socially aware type of standpoint, wants to try to protect people that end up doing it. So there's fundamental differences that are inside there. The Republicans are against any sort of regulations or rules to set prices.
Mm-hmm.
They argue back to the 1970s in energy, and setting prices generally doesn't go and work. Retail stores have an issue, specifically grocery stores kind of have a bit of an issue because margins have done nothing but compress.
Mm-hmm.
And if you set that price because of where inflation is, their cost of goods, cost of employment, those kind of things has an effect.
Yeah.
Now, the Democrats, and this was a big talking point for Kamala, and these talking points generally start to come up anytime we have any sort of natural disaster like a hurricane or a flood.
We've had many of.
Which have happened a lot.
Mm-hmm.
And she wants to stop the price gouging, and she wants the government to get engaged involved. So there's significant fundamental differences. What I'll tell you about this is that it is actually I think that's a political talking point and not anything that will actually end up happening.
Oh, interesting. Okay. I feel like you touched on this a little bit earlier, but talk a little bit again about the child tax credit and the differences there.
Yeah, so the reality is that the child tax credit gives people who have kids a tax credit, not a tax refund, but it gives them a credit against the taxes that they owe, so they may end up overpaying and getting a refund. But what both parties are kind of similar here, and both are open to expanding that child earned tax credit. And so there's not a huge difference. The dollar amount is different, but Harris wants more than what Trump does, but they both are for expanding that. They're also both completely open to expanding things around child care. Mm-hmm. I mean, that was one of the things that Trump did during his administration, was have a focus to a certain extent on some of that.
Yeah.
A lot of people seem to forget it, and that's something that Harris has talked a lot about.
Okay, we've heard talk about down payment assistance. What's your thoughts there, and what have you heard?
Yeah, the Republicans really don't talk about it.
Mm-hmm.
Kamala says, let's give everyone on the first home $25,000. My take on it is that's another one of those political things that will never see the light of day. And so when you go and you look at this from a standpoint of where Congress will probably end up and things like that, probably won't see the light of day, but it's a good talking point.
Okay.
One thing that I'd also like to talk about that has been a really big talking point, or a big fear for clients that we talk to, is this unrealized tax.
Yes.
Unrealized capital gains tax. So just so to bring everyone so that we're all on the same page, right now if I buy an investment, let's call it at $1, and I sell it at $100, that $99, I have to pay capital gains tax. If I buy it at $1 and it's at $100 and I don't sell it, I don't pay any taxes. Mm-hmm. That's unrealized gains. The Harris campaign has floated this unrealized gain tax. So if I have an investment that I bought it at $1 and now it's worth $1 million, and the details that she hasn't really been real focused on, in theory, what they want to do is be able to tax some or a portion of that. Well, where people go immediately is, I bought my house in 1943. I paid $20,000, and now I can sell it for $1.5 million. I have to pay, and I'm not selling it, but I have to pay taxes. They look at these investments. Maybe they're a startup owner maybe they started a company, or maybe they started with a company and have worked with that company. And they've got a cost basis that's really, really low. I'm going to have to pay taxes. There's political season where people go through and say things, and what reality is, and what was actually going to end up happening. There is no possible way that they can develop a mechanism for unrealized capital gains. That is really kind of, the Republicans are like, forget about it, never going to happen. The Democrats are like, yeah, we need to tax these billionaires on their unrealized gains. Well, guess what? You don't have a mechanism to do it. And the biggest reason is that if I had that investment that was worth $1 and now it's worth $1 million, you're now going to try to tax me on it. But what happens when it drops to $20? Mm-hmm. Are you going to give me a tax credit and give me back my money? So the tools for that, it's a great way to create talk, but it's not realistic. Yeah. And anyone who stops and thinks about it, they're not going to tax grandma who bought her house in 1923, or I guess that would make her really old. Grandma's that she bought in 1953, not going to tax her on her unrealized gain on her house. That just isn't. And it's also not going to tax you on unrealized gains that you continue to hold. You do get paid.
Absolutely.
Some other things that I think are going to be interesting. Look, I think when you go to look at the national debt, we've got a really, really big issue. We are right now paying roughly about the same amount to service our debt as we do on the military. Mm-hmm. All right? That's not a good thing for this country as a whole. Without regard to who gets into office, we're going to have to start to address this national debt.
Yep.
Now, there are two schools of thought. We can tax our way into prosperity. We can make everyone pay a little bit more to be in the game. Mm-hmm. Or we can grow the economy. Those two mindsets are going to have a real big issue. And the thing about politics today is that everything is tribal. Either you're right or you're left. Yeah. And most of the time, right and left can't sit down and have a conversation. Mm-hmm. You know? And so as I go through and I kind of think about these things, kind of some interesting points. This is what we know as a fact. Looking at all presidents and their terms. The first year of a presidential term is generally the second best year. The second year of a presidential term is generally the worst year. The third is the best, and the fourth is the third best. Okay, so it goes 2, 4, 1, 3. Okay, in levels of performance. And this is average across Republicans, across Democrats, it doesn't matter, in the White House. But at the end of the day, if you look at each one of those years, you have greater than a 52% chance of being positive that year.
Really?
Yep. So in other words, it's a 52% chance, whether it's the first year, the second year, the third year, or the fourth year, of having positive returns in the market. Mm-hmm. And I think when we were talking a little bit earlier, what was it that you said about?
Oh, even in the years where maybe the returns are less than they were the year before, there's still areas in the market that are opportunities to make money at all times. Even when the outlook doesn't look great, there are still pockets of the economy and pockets of the market that we can find and actually make money.
Right, and I think when you're exactly right. There's always an opportunity. And one time I heard Nicholas Applegate say, I think it was Nicholas Applegate say, tell me what the economy's doing, and I can tell you someone who is losing their shirt, and I can also tell you someone who is making millions. Mm-hmm. So it ends up not mattering. At the end of the day, and you said, I forget how you said it about, at the end of the day, people care about elections. Markets don't. What was that you said?
Yeah, basically markets don't care about policies. Sorry, markets don't care about politics. They care about policies, and that's what impacts the market.
That's right, and that's why when you go through to look at this, right, you go through to look at tariffs. Well, both of them have some tariffs. You go to look at corporate taxes. There's a clear difference. Now, what does that mean for investors? Well, that can mean profitability, but at the end of the day, the markets are still going to do what the markets do. Exactly. Energy, yep, we may end up having lower energy costs, But the reality is that if you're an investor, energy companies did just fine in this last administration. Regulation will be big because that ends up adding to cost. That's inside there. So I think it's been. We've had a lot of conversations with clients about politics. I think a lot of people are really worried. At the end of the day, we're going to wake up at the end of the day, and this is to kind of back up with this election cycle, and every election cycle ends up being the most important election cycle of our lifetime. I think in this one there are a lot of people who fundamentally feel that is a fact. Yeah. But this election's really boiled down to 7 states. And we're starting to get a little bit of a clear picture, but let's remember when in 2016 we walked in and we thought that Hillary Clinton was going to win, and Trump ended up pulling off a surprise. The biggest thing that I think we've got to be paying attention to are really 3 states. Pittsburgh, in Pennsylvania.
Yes.
I'm smart enough to know that Pittsburgh's not a state.
Yes.
Pennsylvania, Michigan, and Wisconsin. Yep. Those 3 states. All the states are important, but those 3 states are really important, with the most important being Pennsylvania.
Well, and one thing that's going to be really tough about election night, Pennsylvania, as many people know, do not allow counting of absentee and what am I thinking of absentee voters and mail-in voters. Thank you, early voters, until the polls close that night, which is 9 o'clock. So the fact that that is such a key state in what's going to end up happening, and they can't count their votes till late at night, it's probably possible that we're not going to know the actual clear result of the election that night.
Yeah, which is kind of insane, right? The very first election that we didn't know was Bush-Gore.
Yeah.
And it was all Florida and Broward County and hanging chads. We remember those. And there were some funny memes well, we didn't have memes then. So there are some funny things that as a result of that. But that we're going to have to be patient. We're not going to wake up on Wednesday morning and know who's president. Yeah. That's a fact. And the states have told us that. Georgia has said that, and so has that. But when you go to look, the president's important, right? They kind of set the tone and where things are specifically with regard to policy. But what sort of thoughts do you have kind of on Congress?
Yeah, I mean, that's going to be super important. So we've kind of talked, there's a high likelihood that the Senate's actually going to flip to Republican. What are your thoughts there? Yeah,
it kind of looks that the odds are pretty significant that that's going to happen. You've got the Minnesota, is it Minnesota? Yeah, I forget exactly which state it is. That is a really close race where you have an incumbent that's running that has a challenger that's coming up. That state could flip. There are a couple other that are pretty clear. What's interesting is I've heard 2 different arguments. One argument is that straight ticket voting has actually picked up, right? So straight ticket voting, whoever's elected president, someone just clicks that party, everything goes, and boom, they're done, right? Well, what's interesting in Texas, where we actually have a very close Senate election going on, we've done away with one click or one single ticket voting. So what's going to be interesting, it's all going to end up being about the number of people who actually go through and vote.
Who take the time to go through and select each one below the president.
That's right. So you may go and you click with whoever you want to be president. Now you have to go click that next one. Well, you may think, well, I clicked that, so it's everyone, so I'm not going to go click everything. Boom, you're done. You only voted for one candidate. And so that's going to be interesting, and that could put a swing. Right now, Cruz happens to be ahead, but Allred is pushing. And by the way, you can't turn the television on without seeing one of his ads.
Yep. What do you think is going to happen in the House?
Well, I think what's more likely is that the House will go the way of the president. Okay. Because so many states have, and there's a little bit more wiggle room there. So many states have that single ticket voting.
Yeah.
And you're electing all the House of Representatives. You're not electing all the senators. So you don't have as much wiggle room inside of the Senate, but you do have a lot of wiggle room. So in these states that do have single ticket, that's probably going to click off a lot more congressmen or congresswomen, and to be and so whatever party that goes is probably where that is. But what's real interesting to kind of take that a step further, markets love a divided government.
I was about to ask you is what the impact is to the markets now.
And so when the president's one party and at least one of the chambers is the other party, that means that you have gridlock.
And
All right?
why is that good?
Because we know there's a known. We know exactly what's going to happen. Nothing's going to change. We know the rules in the game that we're playing. Okay. Now, when you have a single ticket where a unified government, in other words, all parties are in control of the two houses as well as well, then the markets aren't as fired up about it because they end up having the ability to go and fund some of their pet projects or things that may or may not be realistic. And so that's where you end up with massive bills getting passed and 49% of the country not being happy about it.
Well, yeah, because change is actually likely at that stage.
Right. And so I do think we need to be aware of that. At the end of the day, we were talking a second ago about debt, right? The national debt. And the challenge is that you can control that debt by doing one of two things. You can either stop spending or increase revenue.
Yeah.
Right? What is unlikely is that without regard to which party ends up being in control, it is unlikely that you're going to have significant reductions in spending. We're going to eventually have to raise revenue. Now, is that tomorrow, next year? Is that 2026? I don't know. But I think that we have to be keenly aware that what's going to affect this economy, which is going to affect stocks, which is going to affect people's net worth, which is going to affect people's ability to get the outcomes that they want and live the life that they dream of. We've got to make sure that we're paying attention to how much we're spending and what we're bringing in. We clearly have to increase revenue, but we have to do it in a manner that does not stifle growth. That's what we have to do. So there has to be if a genie came out of a bottle and says you got one wish that would be that we could actually go and compromise and have common sense and do away with these pet things that are going on, and let's actually think about things logically and make decisions. Odds of that happening are slim and none. There's no genie, otherwise the bottle would be rubbed, right? But I think that's what we've got to hope for. We got to hope for. It does feel a little bit like that tide's kind of changing. We need to get away from this tribalism. Our policymakers need to make good policy.
Yep, agreed. Man, we've covered a lot. Do you have any other good insights to end with?
No, that's all I have. The last thing I would say is it matters that you get out and vote.
Absolutely.
Without regard to who you're supporting. My biggest hope with this election is, without regard to which party wins, I hope it's a decisive victory, right? I don't want to have any of this mess of challenges and things like that. Let's hope that this is decisive and with either party.
Yep.
That doesn't seem likely, but we'll keep our fingers crossed. The other thing that I'll say is that without regard to people's personal opinion about who will be in office or not be in office, at the end of the day, this country is still the best place to be.
Yes.
Right? And we no matter what comes at us, we're going to be able to take care of it. So I think it's going to be fantastic.
Absolutely.
And so,
Awesome.
kind of with that, thanks for joining us. Hope you like this podcast. We look forward to seeing you next week.
See you next week.
The information contained herein is intended to be used for educational purposes only and is not exhaustive. Diversification and/or any strategy that may be discussed does not guarantee against investable losses, but are intended to help manage risk and return. If applicable, historical discussions and/or opinions are not predictive of future events. The content is presented in good faith and has been drawn from sources believable to be reliable. The content is not intended to be legal, tax, or financial advice. Please consult a legal, tax, or financial professional for information specific to your individual situation.
This work is powered by Concenture Wealth Management, registered representative of Sanctuary Securities, Inc., an investment advisor of Sanctuary Advisors, LLC. Securities offered through Sanctuary Securities, Inc., member FINRA, SIPC. Advisor services offered through Sanctuary Advisors, LLC, an SEC registered investment advisor. Concenture Wealth Management is a DBA of Sanctuary Securities, Inc. and Sanctuary Advisors, LLC.